You're making money, but your bank balance says otherwise. Let's fix that on this video with our 3 tips. If you're new to our videos, hi, I'm Michael from MDH Accountants. Click the bell to subscribe for all of our business growth, tax tips and business advice. If your business keeps on running out of cash, it's not bad luck, it's a bad strategy. Follow my video and I'll explain more. Mistake number 1, ignoring timing differences. Accounts are prepared on the accruals basis. When you first issue an invoice to a customer, that goes down as income in your accounts. But you may have 30-day credit terms and your customers could be paying you later than that. It could be 40, 50, 60, or even 90 days. So you're going to have a really big gap on your customers before they pay you the money. Secondly, you may also be running your creditors where you're paying your suppliers very early. And that again will reduce any cash balances you've got within the business, because if you're paying for goods or services early, that money's going to be out of your bank account. You'll be either sitting with a service or the product. So when you're actually understanding your accounts, remember that they're prepared on the accruals basis when invoices are issued, not when payments are made. Because when we all grew up, when we were going through school and early teenage and even in our 20s, we were always told to deal with everything in cash. And in business, it's just different. So make sure you have a general understanding of how the mechanisms work between your accounts reported profit to actually cash flowing into the bank. Because when you have a handle of that, you will have a massive better handle of how your business operates to make sure that you don't fall into the cash flow trap. Mistake number 2, overestimating revenue. The best business owners that I work with are able to forecast income accurately. Now, I know the first objection that you'll get for this, you go, oh Michael, easy for you because your clients come and pay you every single year. Yes, I'm not saying ours is a lot easier than other industries, but if you're able to forecast your income accurately, you will give yourself a better chance of financial success. Because some of the big problems happen is where a business owner wildly overestimates income, thinks, oh God, instead of 800 this year, I'm going to do 1.2 million, but they end up doing 850. Now, what you could do is you could gear yourself up with more team, you could gear yourself with more overhead, you could gear yourself up with more stuff to able to deliver that. But if you've got a 200, 250 grand hole, that's going to almost wipe out your profit, or it could even take you into a loss. So when you're actually aiming for your business, make sure that you are forecasting income accurately. Now, I get sometimes the counter argument for that will be, yeah, but you've got to set big, hairy, audacious goals. Yes, you have, because they'll inspire you, they'll get you to move forward. But what you want to do is then have a range of incomes. So you might want one that's slightly safer, that you go, yeah, we got a 5 out of 10 chance of hitting this, but we can still strive towards getting our 10 out of 10 one. What I'm looking for you to do is make sure that you're still profitable, to make sure that you're not running out of cash or even change your profit into a loss. So if you can start to forecast income more accurately, you will be able to plan your success 100 times easier. Number 3 is ignoring regular expense tracking. Now, what you tend to have sometimes as a business owner, you'll get one that will concentrate massively on income and you'll get one that will massively concentrate on expenses. So the one that's expensive can be a bit of a miser, cut everything to the bone, make sure that there's no fat in the business whatsoever. Or you'll have a business that will just be like, right, we're shooting for the moon, we are going to 10, 5, 3 times income, and everything's going to be good. When what you really want is some form of a little bit of balance and some form of reality check. Because it's quite easy for a business to be running 5 or 6 years and there's expenses that are going through the business that people are just not using. So one easy trick that you can do to start off with is have a look through your direct debits. And one is not, oh God, that's £1,200 a month, we can cut that. The question what you want to be asking is, does this provide me with more value than what I'm spending? So with every expenses code that you go through, you want to do this as a regular process. And normally your massive wins are the stuff that's on direct debit that was good 3 years ago, but you're just not using now. So if you have this process yearly or even 2 yearly within your business, how much more money can you save? Because £1,000 a month is 12 grand a year. 12 grand a year over 5 years is 60 grand a year. Now that adds up to a bit of a chunk of change. Now you might not find one supplier with £1 grand. It could be 4 that are £250 a month. It could be whatever variation that you want. But how much can you find in that business that can then either additionally pay you extra income that will give you and your family a better life, or you can invest more in your business to help it grow even further, where you'll need less capital because you're saving it, because money is not being wasted. So if you went into your accounting software today, how much money do you think you would find within your business, and what savings would they be over a 5-year period? Bonus tip, not planning for seasonal fluctuations. Now, we would all love if our forecast was exactly the same per month, and it would be so much easier, wouldn't it? But in reality, we have seasonal variations in all businesses. So for us at MDH, we have a really busy spell between April, May, June, because we have a lot of March and April year ends, and we do the accounts quite quickly. So if you looked at actual production of work that we actually produced from sort of April time all the way till September, we see a massive spike in how much work we're kicking out the door. And that's as an accountant. If you're looking at retail, the classic would be Christmas could be quite busy. If you're a flower store, potentially Valentine's Day could be quite busy. But what you need to do is get a real handle on how seasonal is your business, because you need to prepare for the times that it's going up, the times that it's going down, because when you do your accounts at year end, it will be on a 12-month run rate. It won't be that figure divided by 12 as a lovely straight algorithm. So if you was looking back at your business today, how seasonal is it, and what could you do to plan to make sure that you're not getting any bumps along the way, you're servicing your customers really well, and also you are killing it from a profitability standpoint? Actionable tip, use your accounting software to pitch seasonal variations and see what the trend are like over a 2-3 year period. And if you wanted to, we've got a report that we could give you, a 2-pager, where we can analyse that for your business. All we would need access is to your QuickBooks or your Xero. If you say that you came through this video, we will prepare this for you free of charge. Now, I hope this video has been really helpful, but if you've got any questions that have come up that you're not quite sure about, or you just need to talk to someone, click my link below. The calendar link will allow you to book an appointment in my diary. I'll get to understand you and your business. I'll take on board any questions you've got, and I promise there will not be any pushy sales pitch. Now, if you're a business owner that's looking to grow, click below for our business growth program. This is 12 sessions where we run through every single driver within the business that allows you to make more profit. We'd love to see you on that course today.